Hi and welcome to another edition of Weekly Market Analysis by tradersclub.co.uk. Anything that I discuss here, it's available in the public domain and therefore it should not be seen to be advice for your trading or investment. I'm simply sharing my views for the benefit of the club members. I would like to start my overview by looking at the S&P. We can see that price bounced back heavily in the past couple of trading sessions, and obviously reaction to non-farm payroll numbers that were released on Friday was initially negative, but then we finished the day on a positive note. So what I'm looking at the moment is a couple of very important levels. These couple of previous highs would offer a logical level of resistance on the way up, and also this 20 period moving average on daily. So 1803, 1804 followed by 1811 followed by 1813. This is basically S&P spot price or a cash price. So these levels would offer some level of resistance on the way up, followed by 1810, which is 50 period moving average on daily, and then this low here at 1814, 1815. So if the price moves higher, those levels would potentially offer some level of resistance, and we might see a bit of a consolidation here before we see either a breakout higher and then retest of the previous highs. And I would like to see a daily close above 1815 in order for me to change those levels. Alternatively, if these levels confirm their resistance and then we move swiftly lower, then the level that I'm watching as a level of support would be at 1770. Which is the previously tested support on a number of occasions. So a loss of that level, and then especially a loss of this 1760 level as well, could potentially target further downside, including these lows at 1735, 1737, and also this 200 period moving average on the daily at 1725. So breakout above 1804, then could potentially target 1811, 1813, 1815 as a resistance. Alternatively, if we stay here and that resistance is confirmed, then swift move down to 1770, 1770, 1760 could potentially offer some level of support on the way down. Last thing that I'm looking at in the kind of S&P as well is this potential creation of head and shoulders again. So if we assume that this could be a shoulder, this could be a head, and then if these levels hold and confirm resistance and then we move swiftly lower, then that topping head and shoulder formation is still potentially intact with a neckline at these current lows, but I would like to see a confirmation of this resistance at 1804, 1810, and then swift move lower. I would like to take a look at FTSE as well. This is the daily chart of FTSE 100, and we can see that price action is clearly trading back above a very important 200 period moving average, which is this orange line here. The logical resistance on the way up now is clearly defined by fib retracements and moving averages. So if we take the swing low and swing high, we could see that our 50% retracement would be at 6629. Yet again, this is the daily spot price or a cash price of FTSE 100. So the levels that I'm watching as levels of resistance would be this previous high here at 6642. So 6629 followed by 6642 followed by 20 period moving average on the daily time frame, which is 6651. So the cluster of these moving averages and the previous high would offer some level of resistance on the way up, and I think this is even more clear if you see it in 4-hourly time frame. A breakout above those levels, and yet again we have 200 period moving average and 4 hourly there as well, would target 6675 followed by 6685 before we move higher. So the daily close above these levels would probably be seen as a fairly bullish development and continuation of this uptrend. Alternatively, if the price moves lower, then obviously these previous lows at these levels at 6561, followed by these moving averages here as well at 6513, would offer some level of support on the way down, i.e. potential retracement. Let's look at gold now very briefly. This is the daily time frame of gold, and we can see that price action is actually consolidating further. We are unable to break this very important 1235 support level and close below, which will trigger loads of shorts. Alternatively, we are not able to break out higher above this 1279 level. So instead, we have a sequence of lower highs. So the way I'm actually seeing this at the moment is that we can see that a fib retracement from the current swing high to swing low would bring us to about 50% fib retracement at 1272. So the price action is actually testing that level. It's unable to break higher. If we can break higher than 1272 and have a kind of a daily close above that level, then it would be logical to assume that this 1279 high would offer some level of resistance on the way up, followed by this 61.8 fib retracement at 1294, which is also 200 period moving average as well. So there's a fairly significant level of resistance on the way up. Alternatively, if the current support does not hold, and we can see that there's a sequence of higher lows and lower highs, so we're almost creating a symmetrical triangle pattern. So the level of support on the way down would be around here at 20 period moving average on the daily time frame at 1253, followed by the cluster of these previous lows, 1238, 1235 levels. So the daily closure below this 1235 could potentially be seen as a bearish development as well. But looking at this in maybe a 4-hourly time frame would provide us with a clear indication of this sequence of lower highs and higher lows. So the price is actually consolidating, and we will have to see a significant breakout on either side, either up or down, and then potentially be able to play. Currently the price action is actually just sucking people in to go long and short, and it's triggering the stops, and it's making loads of people unhappy. So let's close this and check out oil. This is a CL contract or a US traded oil, and it's the weekly time frame. It appears to be quite bullish continuation of this clearly intact trend. We came back down, retested this 200 period moving average on weekly and bounced back off that, and we are currently trading above 20 and 50 period moving averages as well, and we are approaching this very important psychological $100 level as well. So the current resistance would be the previous high here at I believe it's 175.63. So let's see this in a daily time frame. So resistance on the way up would be at this 163. A breakout above that level could potentially target further upside, which can be based on fib retracements. So 101.71 followed by 104.18, which is the cluster of these previous highs and also some of these lows as well. So these levels would offer a level of resistance on the way up, and a clearly daily breakout above 104.18 would very likely target further upside, potentially even 109 and even 112. Alternatively, if the price kind of stays where it is, and this 100 level proves to be a fairly strong resistance, then potentially support on the way down would be located around these levels, which is the cluster of this previous highs, which were tested before at 98.52, followed by a low at 97.14 and definitely 96.18. So 98.52, 97.14 and 96.60 would offer some level of support on the way down. Bullish traders would probably like to see possibly a creation of a higher low, and then that might be seen as an opportunity to push the price higher again. And if we close this for now and look at a dollar index first, and then maybe we can see euro dollar and cable as well. So this is the daily time frame of dollar index, a really important chart. Tapering should really mean a stronger dollar, and unfortunately that's not a case at the moment. We can see that apart from this little fake out here, we have the creation of higher lows, but the price is consolidating further. The price is unable to break above this very important, this is psychologically important level of 81.48. which is a 200 period moving average on the daily time frame as well. A breakout higher and the daily close above that 81.40, 81.48 level could potentially target further upside, which would mean a euro weakness and possibly even sterling weakness, and it will obviously affect dollar Swissy and dollar yen and everything else. So these would be a longer term important levels of resistance on the way up if we see a breakout above this 81.48. Alternatively, if the current levels of support hold, and we can see that this level here, which is a 50 period moving average on the daily at 80.61, followed by this rising trend line and also this low here at 80.17, would offer some level of support on the way down, and they could potentially be seen as a buying opportunities for the guys who are sitting in a bullish camp, who feel that dollar should really rally for the rest of the year. So if we reduce this now and look at a euro dollar, we could see how that might be impacting as well. So you can see the dollar index might move 15-20 points per day, and euro dollar will easily spike 100 points a day. So they're inversely correlated, but from the weekly time frame, euro dollar appears to be creating some kind of consolidation flag, which could end up as a bullish continuation pattern. However, the daily time frame appears to be slightly different, because we could see that there was a fairly significant top here and followed by these two here. Then Mario Draghi came out and said that he was quite happy with euro staying around 37 level, 137 level. And then last week he came out and surprised everybody during his press conference by the statements that he made, and euro kind of rallied. So what I'm looking at the moment is this a breakout and the daily close above 36.60. 36.60 would probably be seen as a bullish breakout above this continuation flag, and then in that case these levels here at 37.40 followed by 38.13, 38.13 would offer a resistance on the way up. Alternatively, if the current levels of resistance hold and we stay below 36.60, 13660, and move swiftly lower, then a logical levels of support on the way down would be this 20 period moving average at 36 even, 13600, followed by these lows here at 34.83, and obviously 200 period moving average on the daily at 34.36. And if we are going with with the notion that tapering will continue, then this should potentially indicate further euro weakness. And the last thing that I want to see today as well is a cable, and we could see that a sterling dollar actually found some level of support and bounced back off that, and we are currently retesting this 50 period moving average on the daily time frame, and that should offer some level of resistance on the way up at 64.12, followed by 64.45 as well. The other thing that I'm looking at as well is this kind of trend line, which was offering support on the way down, and we are kind of retesting that trend line from underneath now as a newly formed resistance. Our stochastics is oversold and it's bouncing back off from the oversold levels very quickly. So the daily close above that 64.45 would negate this bearish reading, and we could potentially target any of the previous highs as a levels of resistance. We can also do a fib retracement, and we can see that let me open this up in a 4 hourly. It might be a little bit clearer for you guys. So we have 200 period moving average on 4 hourly at that 64.43 again, and the trend line as well. 50 period retracement would be at 64.57, followed by 65.06. So these would be a level of resistance on the way up. Alternatively, if the current levels hold, then a very important level of support for me would be a cluster of these previous lows here, and obviously these highs at 63.44, 163.44. A loss of that level could potentially trigger more selling and maybe a re-entry of the kind of bearish players, potentially targeting 62.54 and also 62.10, 62 even. So these will be the levels that I'm watching on the way down as well. So I can see that this was much longer than I anticipated. Hopefully you enjoy this analysis. If you need to get hold of me, feel free, and hopefully I'll see you at one of our live trading events.